Good morning, investors and traders. This is Naim Azam, Chief Market Analyst at EverTrade, and welcome to our daily technical analysis video. In today's segment, we will be looking at the US NFP data because that is going to be the biggest news in terms of a stock market and, of course, in terms of our forex market and commodities as well. So we'll be looking at how this particular number is going to influence the gold prices. So let's have a little bit more deeper conversation around this topic. But as always, it is important for us to go through this disclaimer and risk warnings. Anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform, which can be downloaded from our website, evertrade.com. Now, on the daily time frame, what we're really going to focus on is first of all, we need to pay attention to three different moving averages. Firstly, it is your 200-day simple moving average right over here. Followed by that is your 100-day simple moving average, and finally your 50-day simple moving average. Now, clearly, the price broke above these particular moving averages right around this particular price level. Initially, it broke the 200-day simple moving average over here, which was the first indication that look, the trend is changing, and now we are likely to see a bull rally, which we did because obviously price went from below 1873 to all the way to 1961. Then the next particular indication on the signal came when the price moved above the 50-day simple moving average, which happened, by the way, just around $1,873 price level approximately. And then after that, the price also retested the 100-day simple moving average as well. Now, in around this particular price action, the price was retesting these moving averages once again. But what the price confirmed, the second touch when it happened for the second, when the price touched the 200-day simple moving average for the second time, it was very clear that we have enough buying support for this particular asset, which is gold, and it is going to move higher. And then hence we saw this massive rally from here, which moved the prices below 1873 all the way towards 1961. Now, of course, the price failed to break above its previous resistance level, a level which was formed sort of right around this particular price level, and the price tested it again in around these price levels, and now the price was coming into this particular resistance area for the third time. Usually speaking, when the price does come into such a resistance area, which is already being tested like over here, usually price easily can break through that. But the fact that the price hasn't been able to break above this particular resistance area, it shows that look, we have a little bit more weakness left in gold prices. Now, the reason that I have used that term very carefully is because the prices are still trading above all the three important moving averages, which are right over here. Now, of course, this is not our major resistance zone. Our major resistance area in relation to the price action is this particular area where it's mentioned that this is your resistance area, and that is the area that we are focused on the most, which is your all-time high. But at the same time, what we also need to do right now is to define our support zone once again. And that support zone is going to be defined by these particular lines. And I'm going to just change the color of these lines to, let's just say, red, so that we can differentiate clearly on the chart when we look at the price action that which one is our resistance zone and which one isn't our resistance zone. Of course, you can keep them in various different colors the way that I had them, but it is also preferable among investors and traders that they keep the support zone in sort of in a green color as compared to anything else. So what we're seeing right now is the price is really challenging its 100-day simple moving average. One important thing when I look at the daily time frame is that I kind of like to go into smaller time frames, intraday time frame, such as a 4 hour and 30 minute, and then see how the price action is really holding up with respect to these moving averages. So let's have a quick look at that. So when we go on to the 4 hour time frame, it becomes very clear that both are really struggling right now to hold the price where it is, but we still have a lot of hope because the price recently pierced the 100-day simple moving average, as you can see over here, but it quickly moved back up. But the more important thing is that how the price is going to perform in this support area, which we have defined it over here. So let me just actually label those ones in front of you so that you know which is what. So this is your support area, and then this one over here is your resistance area. Now, we know that the price is still in battle with its 100-day simple moving average, but at the same time we also know that the RSI is also heading towards its oversold area. The last time the price was sort of coming close to these particular levels, which was right over here, and then we know when the price was here we saw this massive rally, and before that the price was near that 30 or the 24, which is classified as oversold area. At the time the price went up to 1764, and then we know from 1764 the price really started to move higher because 30 is your oversold and 70 above 70 is your overbought, meaning anything around here one should be looking at to sell the actual price, the actual derivative, and when the price is near 30 you could be looking at to buy that particular asset. And over this time frame, since November to here, it makes quite a lot of sense because over here, when the RSI kind of dropped below the 30 over here, apart from this particular one, we saw this massive rally. And then, of course, over here, when it went up here, the price started to move to the downside. And again, over here, when the RSI was still trading close enough to its overbought area, we saw the prices started to move lower, and then the moment that it kind of starts to come close to that 30 price level, the 30 RSI level, we see this sort of movement to the upside. So let's see how the price will perform. But as the US non-farm payroll data is due at 1:30 p.m., the expectation for the US non-farm payroll number is very much on the low side, meaning the number is going to come below 100,000, which will be the first time in nearly 8 months that we will see this number coming so low. So the expectations are for gold prices to move higher on the back of that, because that would show that the US labor market conditions are deteriorating. All right, that's all for today. See you guys next time.